Hello again, and welcome back to another episode of Educational Insights from Five Plan Partners. I am Mark Hume, and today I want to talk about tax-free health care. If you have access to a high-deductible health plan, you have access to a health savings account. And a lot of folks use these. You get to completely bypass all forms of taxation on your payroll, including Social Security and Medicare, along with the federal and state tax that you get to avoid when you defer on a pre-tax basis into your 401k. I think that the HSA can be one of the most valuable investment vehicles that exists because you get to avoid all three forms of the taxation that I just referenced. Now, you do have to have a high deductible health plan, and that may not be appropriate for everyone, so that may mean that you don't have access to it, but that's more of a personal and specific conversation to be had. Today I just want to talk high level about the benefits that the HSA can bring to you. I think of the HSA as not a use it now for your doctor copay. I think of it as save, invest for the long term, and this is absolutely a delayed gratification tool. And what I mean by that is that you're going to pay for those copays out of pocket while you're putting that money into the HSA, and if you invest those dollars and you realize a lot of great growth over multiple decades, you can use all of those dollars free of all three forms of tax for qualified medical expenses in your 60s, 70s, and 80s. A great example of an adjustment that we just made with a client, they said, I contribute $23,500, the maximum I can, to my 401k, and that's really about all I can save right now. And I said, okay, well then let's peel off the $8,000 amount that is the maximum allowed into the HSA, and let's put it in that bucket, and let's do the remainder into the 401k. And so now you've got two different pre-tax buckets that are growing, and you're building that HSA at the triple tax advantage. I think that this can be a really valuable tool for anyone, but it's important to note that if you're on Medicare, you're not eligible to contribute anymore. So there are some of those folks that have the overlap of being enrolled in Medicare but maybe still working, and unfortunately you don't have that capacity. But if you're in that boat, if you're retired and you don't have that account, at least tell your kids and grandkids, because it can just serve so many productive purposes for them for many years to come. So thanks so much for your time today, and we will look forward to another conversation again soon.